The streak is over. The Dow's five-day bull run hitting the skids on more European worries as Moody's downgrades Portugal's debt rating to junk. Euro-Pacific Capital's chief economist Michael Pinto isn't surprised at the selling. He says Wall Street has been way too optimistic lately, that 5% increase last week notwithstanding. But NewOak Capital president and co-founder James Frischling believes investors just don't have many other options right now. They both join us. So, James, what do you think we're heading into? Do you think we're heading into the 5% gains we saw last week or the middling loss we saw today?
Sure. I actually feel that it's going to be a cruel summer with low returns and a fair amount of volatility, and I think we're going to see light trading volumes. It's going to be a grind.
Do you sell with expectations that's going to happen?
And I think to a certain extent, no one should underestimate what happened at the end of June in terms of rebalancing, end of month, end of quarter. I think that had a material impact on why we saw an uptick. But at this point, I think we're in a grind, and I would be leaning a little bit, I don't want to say I'm overly bearish, but the fact is I'm not optimistic either, and I think it's a grind slightly lower.
I would believe you are too, a little bit bearish.
Oh my God!
Right.
Yeah, right.
You're so happy.
Well, listen. The big question for me is how high do interest rates go? The biggest buyer is now out. They were buying $80 billion a month. And now they're going to be buying about $35 billion a month. And the money supply is booming. If you see MZM lately, it's rising at a 10% annual rate. You've got inflation. You've got a huge supply coming on the Treasury market. And my question is, who's going to buy it?
Okay,
I'm sitting out. I'm
Michael,
in cash.
But,
you can say anything you
Michael,
want.
here's the thing. So what if interest rates tick slightly higher? Don't look at me like that.
What do you mean tick
Don't get
slightly?
that face off there.
Well,
it happened in Brazil in the 90s when they had hyperinflation.
Right.
They raised interest rates slightly, and oh, my goodness, you know what happened? Foreign investment came in. And people were happier because some of their savings actually got a better return. So why is it the worst thing in the world if we saw a slight uptick in
when household debt as a percentage of income was like 60%, it's not so bad as it was in the 80s. Now it's 120%. When the national debt has increased 90% in the last 6 years, financing the debt becomes a lot more difficult when interest rates rise. And they could go as high as 7%. Tell me who the incremental buyer is going to be, and I'll be as happy.
Now, James, we already see a housing market that is in the doldrums. It's never really recovered fully. In fact, it's just continued to go down. Would this be the final nail in housing's coffin if, in fact, what Michael says happens?
I mean, the regulation or the logjam of the regulatory issues confronting the resi market should not be underestimated, and I think that is keeping a lot of money on the sidelines. There is cash available to invest, and I think the interest rate policy is going to remain unchanged, and I think to a certain extent, to me, the wild card over the next couple of months is corporate earnings. If corporate earnings do as the bulls feel and actually produce, then I think that we will actually grind a little better than I'm predicting. I'm concerned that the pre-announcements, I think 65% of the companies that have pre-announced have been on the negative side, down pre-announcing negative, and as a result of that, I'm concerned that corporate earnings are going to actually be lower than expected, and that will be a hammer.
You're saying good earnings, but not a great economy. Michael, we just had the durable goods number from last time around revised to the upside. How can it be? I'm the biggest optimist here. Is this possible?
You probably are. You're ignoring Chicago, you're ignoring Philly, you're ignoring New York. These are all manufacturing surveys that
are you
really
ignoring
were subpar.
Last week where we saw the transports up more than 6% and the Dow up? I mean, the markets, of course, there's a disconnect between the economy and the markets. Right. But at some point, you're starting to see a slight closing of a gap, are you not?
Well, the market hasn't gone anywhere in nominal terms in 10 years, and in real terms, it's gotten destroyed. So I can't get upbeat about a week rally or a month rally. It doesn't get me going at all. I want to see something addressed about the debt situation. I want to see our dollar strengthen. Look at the Strategic Petroleum Reserve. This is the kind of mindset of the people in Washington. I mean, they must have gone to a school for mentally challenged amoebas. Because I'll tell you the truth, they empty out all of our reserves, and guess what? The price of oil
like Charlie Gasparino.
The price of oil is at higher now than it was when they did that.
James, the bottom line is that we don't know if there's going to be any kind of agreement between Democrats and Republicans. But if the president comes out later this hour and says, look, it looks like we're going to have an agreement. I'm not going to raise tax rates at all. I'm going to do what I did back in December, which is essentially to give in to what the Republicans asked me to, at least as far as taxes are concerned. Will that send the market up? Will that turn around the negative scenario you painted.
I certainly agree that if they can remove that wild card, and I do think that wild card's coming off the table, but I think it's going to be a two-step process. It's going to be a short-term agreement, a 6+ month agreement, and then followed on by a much larger discussion. So I think they're going to get there, but that's not going to be enough good news because they know it has to be revisited in 6 months.
All right, thanks to Michael Pinto and James Frischling.
Thank you very much.
Good to see you.
A lot of negativity around here. Okay, well, Fox Business Alert.